Good morning. Good morning. Good morning. Happy Friday. Who's in here? Who have I got? Getting my goodies situated here real quick. Let's see. I got that up there. I've got this right here. All right. That's good. And yeah, let's get this up over here as well. And this as well. In 1 second. News, economic news, we're set. Well, happy Friday. Happy Friday to everybody. Just getting started, so I'll give everybody a minute or two to pop on in before I dig in. It's Friday. It's always a good day. I always say it's always a good day by default. Fridays. So anyway, yeah, as you guys pop in, just let me know who is in. And we'll tackle some charts, tackle some setups, et cetera, et cetera. Let me make sure my volume sounds good. It does. All right. We are set. So let me get my chart over here up and rolling. Get my volume over there turned down. Share this instead. All right. We are all set. So yeah, guys and gals, just let me know that you're here as you pop in. Just say hello. Happy Friday. Let me know any tickers that you're looking for. It's Friday. Okay. It's always my day to typically close my trades out at the end of the day so that I'm flat on the weekend. Unlike last weekend where I remember I stayed in my NASDAQ trade over the weekend and sweated it out, but it ended up becoming a nice winner this week. So I don't know. It might become my new thing a little bit. I mean, it is always, especially for beginners. I will say it this way, especially for beginners, it's just a great idea to be flat when you go into the weekend because you never know what geopolitical event can just turn your trade upside down when the market's, open on Sundays. Open on Sundays here in the U.S. I should say the Americas, right? This hemisphere, or obviously across the pond Monday morning. So it's just, man, sometimes you can get some crazy gaps, crazy gap ups and gap downs when the market opens for you the next week. So it's always just a good idea to be closed out of your trades, especially if you're in any type of, prop challenge account. Some of them don't allow weekend trading, as you all probably well know, and just like news trading. Okay, so it's always a good idea just to set an alarm. Okay, set an alarm for about 15 minutes before the end of the intraday, intra-week session, just so that hey, I better go take a look at my open positions, make sure I'm flat, or whatever the case is, right? Tidy up your positions. I mean, obviously, if you're a longer-term position trader or long-term swing trader, then, that's a different story. But I'm mainly referring to the newer people. It's just a good idea just to be careful, okay? Not a whole lot more that needs to be said on that. The first thing, one of the main things I was taught going into your trading day, your trading week, the end of day, the end of week, one of the first things that I was taught was always go and open up your positions tab on whatever trading accounts you have. Doesn't matter whether you got a cash account, a prop account, whatever the case is. Just see what you're in. So in today's case, you guys, I am in the gold trade. That's the one that we opened up yesterday. Let me see. I think that might have been Algo Plus. I think that might have been the one that mentioned gold. So I hopped in there as well, and it's looking pretty good. Okay. So just looking at that gold trade, get this resized a little bit. Let's see here. Yeah, I started off with was it a 4 hour? No, it was a 1 hour, I think it was. Yeah, it's 1 hour. I think 1 hour, 2 hour, 1 hour. Okay. So 1 hour on this platform. But you guys, I do have this 1 hour demand zone hanging out over here. Okay, this was the whole basis for me getting into this trade, the whole start of it. So yeah, and again, guys, if you would just drop a line in the chat, just say hello, happy Friday. Let me know if you have any specific tickers you'd like me to look at. We'll take a look at today's economic calendar as well, because we do have some items planned here in the 55 minutes. Okay, when those red folder releases are set to be released, and we'll make it a good Friday. Okay, I'm probably not necessarily going to be looking at any 4 hour time frame trades today, just so I can try to remain flat going into the weekend, because 4 hour demand and supply zones, they typically need 1 to 4 days for me personally with the way I have my rules set. So unless it's just like a grade A setup, I'm probably going to ignore the 4 hour zones today and just look at specifically the smaller time frames, the 5s, the 15s, the 30-minute time frames. Okay, because if I'm playing around on those time frames today, I should be able to expect to get at least a 3-to-1 reward to risk on whatever the instrument is I'm looking at. So anyway, guys, yeah, just say hello. Let me know you're here, so I know I'm not talking to myself. All right, get my caffeine rolling. I laid around in bed a little longer than normal today. I was just enjoying it. There's nothing better than that time that you wake up because your first alarm goes off and you get to snooze a little bit. Yeah, I'm one of those guys, snoozing. Okay. I don't snooze as bad as I used to. I used to snooze a good hour or more. It's ridiculous. But I finally got good at hearing the alarm, getting up after the first, couple 3 snoozes. But today, it took a little longer. I think it was about 50 minutes I snoozed. So I reverted back to my old self. Bad. That's okay. That's okay. That's okay. So anyway, let's take a look at the economic calendar. We'll get back into my gold trade here in a little bit. Guys, today is all about employment numbers. Okay. For the Canada dollar and the US dollar, by the way. It's not just relegated to us. But yeah, that all comes up at 7:30 my time. So again, that's in about 53 minutes from now. Other than that, we've also got the University of Michigan sentiment being released. So that'll be an hour and a half after that first wave of releases. But as far as Canada goes, guys, their unemployment rate is not looking as good as ours is here in the States. Okay, I got to say. Now they're sitting at 6.5 from their previous reading up here. All right. And they're projected to go even more. Okay. 0.2% of an increase on unemployment rate. So that's not great. That's another batch of people that are out of work. I mean, that's less money. If you're out of work, you guys know how it is. Okay. I definitely know how it is. When you're without a job and you got to just completely contract your spending, right? It's not a fun thing. Not a fun thing at all. I'll get to that more on that in a minute, by the way. But yeah, just think about it. That's less workers in the workforce. That's less money being spent. That's less money going into the economy, going to the GDP and this and that and other. So anyway, we'll see what the final tally is on that. Again, that is here in about 52 minutes for the loonie. And then other than that, you've got the employment change number, okay, happening at the exact same time. Not good either for Canada. Okay? Not good at all. And it's really a common theme for both countries, our country and Canada's. Okay, our employment numbers aren't looking the greatest either. But their previous number, at least on the employment change, was 53,000. Okay, now they're projected less. They're projected a 1.8 thousand less. Okay, that's not good. That's not great. It's not great at all. So We could potentially see some pretty ugly spikes on the loonie, on the Canada dollar, okay, if these numbers ring true, and especially if they're worse than what you see there. So that remains to be seen. Obviously, if we get a hot reading, I should say a nicer reading, then it could change things. So either way, expect some volatility in the loonie, in the Canada dollar, especially because it's being paired with the U.S. employment numbers. Okay, the average hourly earnings, the non-farm payroll, which is the big one. Okay, this is our big report of the week, not just the day, but the week, guys. That's going to be a huge one. Okay, this is the account killer. This is the account killer. Okay, previous reading 64K. It's projected only to increase by 2,000. Okay, 2,000 jobs, which on its face isn't really like a big deal. I mean, it should still create some. It will definitely look dollar Canada dollar Forex pair. We're going to keep an eye on that on a 1 minute time frame when these reports come out, and you'll see what I mean about volatility. We'll put it on a 1 minute chart and we'll just sit and watch. Not interested in trading dollar Canada dollar at that time, okay? Because that can be an account killer for a lot of people. You know, the non-farm payroll by itself is an account killer. But then we start adding in these other items, the unemployment rate, the average hourly earnings for the dollar, not to mention Canada's employment numbers. Guys, we may be looking at a earthquake telemetry machine just going up and down, okay? So if you have to, take your mouse, put it on the back side of your laptop or your trading computer, and just sit on your hands. Just stay away from the buy button or the sell button. Good idea. Good idea to do it. So anyway, guys, let me know you're here. Let me know you're here as you pop in, just so I know who I've got, and make sure my faithful people are here. Okay, I got a nice humble group of you, which we're going to start growing on, hopefully in the near term. I do have some big news that I will report to you guys as well. Okay, as evidenced by my title. And then also my posting that I posted yesterday. So stick around for that. Stick around. Let's see here. So yeah, that's it, guys. I mean, that's the main thing for the day. Those employment numbers coming out. Again, we'll have some more later on, an hour and a half later. But outside of that, okay, stepping away from the red folder events for a minute. Even though it was a yellow folder, meaning a light impact, we did have some Euro retail sales reports coming out. Okay. So they actually had a little bit of a positive spike on their overall retail sales. Now, Italy did as well. Italy's retail sales, that looked good. Okay. A little bit smaller of a part of the Euro, but Italy's a huge country and a huge economy. So, anytime Germany, Italy, France, okay, anytime those countries have great reports or negative reports, it affects the euro, albeit, specifically on that country level. But, if one of them catches a cold, it gets passed around to the other countries potentially, and vice versa, right? Somebody strikes it big, it sometimes has a tendency to carry over to the rest of the Eurozone. So, even though that's a yellow report on its face, a light impact, it's still important because, for me, I want to know what the euro is doing as a whole. Is it a strong currency? Is it a weak currency? To be able to let me know if I want to pair it with something of the opposite. Well, I'll give you a hint for the euro. It's actually gotten a little bit of strength lately. And I know that because of the economic surprise meter. Okay. The euro, I believe, was tied with the pound as recently as early this week, at least last week. But this thing was all the way down at 17%, meaning, at the time, it had only exceeded expectations on 17% of its economic releases. So that was economic underperformance. But now it's kind of flipped on its head. The euro is actually looking fairly decent. Okay. There's a 40 to 60 range I look at that's kind of on the neutral side. I don't really, it doesn't really excite me either way, bullish or bearish. But when you start getting to 60 or higher or 40 or lower, okay, kind of that extreme end on either side, well, that's when it's starting to look a little bit more appealing as far as I'm concerned. So let's take a look at the euro. Sherry, there you are. Happy Friday to you, Sherry. Happy Friday. Happy Friday. Let me know if you've got anything specific you'd like me to look at. We just took a quick look at the economic calendar for the day. And at the moment, I'm just simply looking at the strength of some of these currencies. So, yeah, I was mentioning the euro. The euro did have a yellow folder event for their retail sales number, and Italy came out with theirs as well. They are light impact, low impact, but that's an important factor, I think, in the euro overall, the euro itself. And then, of course, you had the Swiss unemployment rate. Guys, some of these reports, even though they are light impact, again, you stack them up, and they can become, important, become vital. So anyway, we're just over here on my economic surprise meter and observing that the euro is actually starting to gain some strength. So, this is quite the hike. Again, last week, the Swiss franc, the euro, and the British pound were all tied at 17, meaning they were both underperforming. Now, the pound, the bottom is falling out of it. Look at that, 0%. Holy cow. That means the pound is in the dumps. Yeah, Sherry, how do you calculate the score for the strength of the currency? It's basically a percentage. So for example, let's just flip on over to the euro. Where you at? Oh, sorry, wrong one. Okay. Let's see here. So basically, let's see, 3, 4. Okay, yeah. So this is the euro. So this is nothing more than the high impact events. Well, some of them are medium impact, I think, but these are the main events that we get released over here on the economic calendar, right? So that's what this is. So essentially the way this 60% impact is calculated, number one, the first thing we want to do is take any report that says neutral, meaning they met expectations. Okay. And it just basically kind of cancels itself out. So we just kind of in a way skip that. And we look at which reports exceeded expectations on the forecast, which reports missed expectations on the forecast. So in this case, for the euro, you can see we've got 3 reports that are bullish, meaning they exceeded expectations. Okay, your unemployment rate, your PPI, and then your GDP number. So those reports came in good for the currency. And then on the other side, flip side, the services PM, basically the purchasing managers indexes readings came in bearish. So if you're looking at the overperformance or outperformance, you take the 3 bullish and then the 2 bearish. Okay, and you add it together, that's 5. So if 3 out of 5 were exceeded expectations, then that's 60%. So that's 60% of the reports that were either hot or cold. That's 60% of them that exceeded expectations. So when you look at it that way, it just kind of turns the whole thing into one big indicator, right? Because you don't want to, the one thing you don't want to do, and this is what I did early on in my trading career, the one thing you don't want to do is make your trading decisions based off of only one of these reports. Oh, the GDP came in really hot. I've got to go buy the euro, right? And then you turn around and say, oh, the PMI data sucks. I've got to go short the euro, right? That's how a lot of us get our start trading. Okay. We only look at what's in front of us. In other words, I go flip here to the economic calendar and I make my buying and selling decisions based solely off of, for example, today, the Canada dollar employment numbers or the US dollar employment numbers. Well, it's the idea is you have to take all this into consideration. Okay. You can't live and die by just one report release for fundamental analysis. Okay. We're talking fundamental analysis here. Okay. My fundamental analysis tab over here. Right. Which, by the way, Trader Nick did an awesome job about kind of simplifying this over here, because this is all that matters in trading right here, guys. Fundamental analysis, sentiment analysis, technical analysis. Okay. So he kind of broke down all the reports into its own folder, and it's just beautiful. I freaking love it. But anyway, the idea is, guys, we got to look at the economy as a whole. We can't look at it just from employment numbers, just from growth numbers, okay, just from interest rates and make a buying or selling decision. You have to take everything under the umbrella. Yeah, everything under the umbrella to make a good decision. I mean, a good trading decision, a good probability decision, guys. Nothing in trading is guaranteed. The only thing we're trying to do is stack as many of these odds enhancers in our favor, whether we're going long or short, from a fundamental perspective, okay? And then obviously we've got the sentiment side of things, the sentiment analysis, which nobody talks about. Nobody, absolutely nobody talks about this, okay? And that's the COT report and the retail sentiment combination. Are the big banks going long or short on an asset? And are the retail traders doing the opposite? Okay, that's a strong combination right there. Okay, because if the retail traders, the regular Joe Schmoes on our trading laptops or our smartphones, if we're going long something, but yet the big banks are going short, net short, okay, that's a very strong sentiment analysis reading. Okay, and the idea is we want to follow the banks. Okay, full disclosure on that, since they're the ones making the money. You guys hear me saying this a lot, right? Ride the coattails of the banks. Follow their directions, follow their leads. They leave blueprints on the charts in the form of supply and demand zones and strong moves, the gaps, the bullish, the acceleration gaps that we like to have, that I like to have anyway, at the beginning of my supply and demand zones. So yeah, it's as a whole. It's always as a whole. Never want to make a buying or selling decision off of unemployment rate by itself. Never want to make a buying decision based off GDP by itself. Now, if you're a scalper, or you're trading on a 2 or 3 minute time frame or a 5 minute time frame, then you could kind of get away with it, because at that point, think about it. If you're trading on a small time frame like that, are the banks trading down there? No. So who are you trading with? Who are we trading with if we're trading on a 1 minute time frame? If we're trading with a 3 minute time frame, a 5 minute time frame, right? Who are we trading with? We're trading with retail traders. Okay, all the regular Joes and Jills on their smartphones. Okay, they make irrational decisions because all they're looking at is one report and a small time frame. So if you can figure out how to time it, you can actually, I wouldn't encourage it, but you could do it. I say I wouldn't encourage it because I think that's a little bit more of an advanced way of trading. I just do. And that's no disrespect to the newbies, okay? But they don't know what they don't know. They don't understand how the noise of the market operates just yet. So, but yeah, you start getting some experience under your belt and you can figure out how to time that stuff based off of one report release. What's up, Algo? Good to see you, brother. So yeah, that's the concept behind trading on a small time frame and trading off of one report release. So as a swing trader, for me, as a short-term swing trader, that's what I would call myself. I mean, I guess everybody wants to put everybody in a box, right? So I'm definitely not a scalper. Okay? Definitely not a position trader. I'm a swing trader, but I'm not a long-term swing trader. I'm more of a short-term swing trader. So I know my niche. I know my market. I'm in one to 4 days typically. Okay. Yes, sir. I held that gold. You kidding me? Hell to the yeah. I got to admit though, Algo, I was a little annoyed when I saw it go up because when I was on stream with you guys yesterday and I got in that trade, I can't remember exactly what time of day we placed that trade. Let's go look at that real quick. But I didn't get into it on my other challenge accounts. Algo. I got into it on my demo account, which is what I, use to show you guys trading examples. So let's go take a look. What time of day did we get in at? I know it was during our stream, but I got distracted after my stream, okay, with some stuff, which I'm going to tell you guys about here in just a moment, by the way. So I didn't get into it. So that was 7:53. Yeah. So guys, Yeah, so I got in this trade right at the end of my stream. Yeah, yeah, around 8. Yeah. So here's my candle. Okay. This is where I got in. So 7:54 my time. Okay. As soon as 8 o'clock got here and we ended our stream, the yeah, let's just say I got busy with some stuff. So I failed to get into it on my other 2 challenge accounts. Guys, I've got a 250K challenge account, and then I've got a 100K challenge account. So I've got a 350K, between my accounts. But I'll tell you more about that here in a moment. Okay. There's been a big shakeup with the world of Tiger. Okay. The trading world of Tiger. I think it's going to be some good stuff. So let me see. I guess I could go ahead and tell you guys this now. So I spent all day yesterday doing a hell of a lot of updates on some things. And long story short, I am out on my own now. Okay. So I was affiliated with Ola Prime. Okay. Contracted with them. Long story short, they had to change a lot of stuff around. You guys saw we had a wave of coaching departures, I guess you could say, at the end of December. So, I held on a little bit longer, but yeah, I just got to the point where they kind of had to change the program around. So my contract wasn't updated or, picked up as far as the next contract. So yeah, nothing bad. I'll go, nothing bad. No, I didn't get my contract renewed. I mean, I'll just put it that way. Right. A little bit of a differences on some things, but overall, guys, let me tell you, it's opened up a lot of stuff. I've already kind of had 3 opportunities come up like not soon after that. So yeah, I went from a slight moment of despair to, oh wow, I didn't realize I had all this around. So yeah, I'm not officially with the Ola Prime anymore. They did say that at some point, hopefully in the future, that they may be able to pick it back up again as far as the streaming where where we have a bunch of coaches all at once. But yeah, guys, look, at the end of the day, if you don't get views and you're throwing a bunch of money at a project, right? At some point, you got to cut your losses, right? So it wasn't anything against us. It was just they just couldn't figure out how to make it work financially, right? Couldn't figure out how to get the viewership because obviously, it takes a lot of money to hook us up, get a bunch of really good coaches together to spend their days working on the stream every day. And not only that, all the side projects and things. So yeah, the cost benefit analysis came out, and it just was decided that they just kind of had to do some more downsizing. So I just happened to be the one on the axe. So I didn't necessarily get fired or anything like that. They just couldn't renew the contract. Okay. And my time is valuable, right? Very valuable. So yeah, we just couldn't come to agreement. But it was very amicable. The people at Ola Prime, I got to tell you, are some awesome, incredible people. And I'd go to war with them again. Right? Really would. But yeah. I mean, we departed amicably. I'm going to get some letter of recommendations from them. Okay. They agreed to that. And wish them well. And now that I'm not officially with them, I can still confidently tell you guys that is the top firm as far as prop trading. Okay. I've done a lot of research on some of these prop firms out there. And you guys probably well know, if you don't already, that prop firms come and they go. They're a dime a dozen. They come and go. So many of them are shady. So many of them have crazy rules that they like to hide on you. Okay. So many of them make money off of the failed challenges. Let's just call it what it is, right? But I will say Ola Prime's been an awesome company. Big, huge blessing to me. And I'll forever be grateful for them for giving me the opportunity to get on here and stream every day with you guys. I know I've learned a lot. And I've talked with all the coaches after, and everybody agrees. It's an awesome experience. Okay. So yeah, it sucks that we couldn't make the viewership work. But the beautiful part is it helped us to get exposure as individual coaches and really hone in on our craft. So it's already opened the eyes of some other places. again, I've already talked to 2 different sets of people on some side projects. We're going to get going. So definitely stick with me on here for those. Excuse me. But it also frees me up to kind of talk about what I want. Okay. Which I've always pretty much talked what I want, but I can talk about other followers that other people I follow. Okay. Other people, some of my mentors, and kind of put the spotlight on them. Now, the cool thing is, guys, you guys see that I use this Edge Finder software, right? Well, this is from Trader Nick. This is from A1 Trading. See, this is something I kind of had to keep to myself while I was obviously affiliated with another prop firm. So, but yeah, I'm actually going to be hooking up with them, doing some work with them as well. The guys at A1 Trading, okay, Trader Nick. So after my stream ends, if you guys want to really get some more secret sauce on how the markets work, that's the dude to follow. Okay, A1 Trading at Trader Nick on YouTube. Okay, that's where that's the guy I've been following. Okay, one of the guys I've been following. And this is why. It's because of this tool right here. Okay, the Edge Finder. Giving me my top steps. Okay. This was my missing piece in trading for a long time. I spent the first decade of my career thinking that technical analysis was the main thing, was the only thing. I knew fundamental analysis existed and I knew that it was important. I just didn't know how to utilize it. Let's put it that way. Excuse me. But because again, I used to just sit over here on Forex and just look at the one report that was being released, thinking, "Oh, that's the end all be all. This market's going up, this market's going down because of one report." But it wasn't until I really, got the edge and realized that you got to take all this data into consideration, everything up here, the technical analysis, the sentiment analysis, the fundamental analysis. It's a 3-headed monster. Okay, 3-headed monster. So this is where it's at. You got to look at everything as a whole, collective whole. Because again, all these items, these are nothing more than odds enhancers. Any one by itself isn't that big a deal. But when you start stacking up all these and you start getting a big chunk of them in the hot territory, okay, you got a bullish signal. If everything's starting to be red down here, like down here on the Swiss yen, okay, I don't want to be buying that. If anything, I want to be selling it. So we just look at our chart. We just go look at our chart and time it, right? That's how it works. So, but again, my first decade was all about the charts. That was it. Just the chart. That was it. Okay. But now the chart is the last thing I worry about. Okay. Supply and demand zones. I mean, it's gotten to the point where I can kind of explain it, pretty quick. But it's funny that it's ironic that I spent the biggest part of my trading career focused on the least important thing. Because again, it's all about the fundamentals. It's all about the sentiment. Okay? That's the why. The why is the fundamental sentiment analysis. The where is the charts, the technical analysis. So anyway, yeah, again, awesome company. Love all those people. They gave me an awesome opportunity. I'll forever be grateful for them. So I've got nothing but good things to say about them, just so everybody knows, and just so I'm clear on that. But yeah, look, again, it frees me up. I've already got some projects. I'm going to be going and appearing on Trader Nick's podcast next week, or on his live stream. Okay, I don't know the details yet. I'll let you guys know about that Monday. But yeah, some exciting things happening. I'm pretty excited about it. Okay, so yeah, and on that note, I may even play around with my times too. I know I kind of hinted at it, I think, the other day, as far as times for me to live stream. But I don't know. I may throw in an afternoon session. I don't know. I'll probably write up a poll and post it after this stream. But if you guys can help me out with that, just let me know. Hey, I mean, obviously right now I'm doing 6:30 to 8, but I'm more than willing, to potentially add an afternoon time. I was talking with Grok about this, and that was what I was asking if the best times for a Forex trader to be streaming. And this was one of the main time frames right here. But it did also say consider taking a 30-minute break after this ends and then doing another hour, hour and a half. So I don't know. I'm learning this on the fly. So yeah, if you guys can help me out with that, then yeah, again, like I said from the outset, I'm doing this for you guys. I'm doing it for you, but it's indirectly benefiting me as well. I mean, I'll just be transparent about it because I told you guys this, I think yesterday. The more I teach people, the more I learn myself because it really reiterates things and reinforces things. So awesome stuff. A lot of good things happening. But anyway, guys, I'll digress and get back into the charts here so I don't have to blabber to you. Yeah, exactly. It's nice now I go having my own thing. So it was, yeah. So anyway, but yeah, just to finish my thought on gold, guys, where are we at over here? Let's go back to my gold chart. So looking at this thing, algo, I think that was, yeah, algo. So I have to be aware. So, well, we have to be aware. And I think I talked about this yesterday. We do have that overhead supply zone up here. Let's see here. 2 hours, was it? Yeah, 2 hour time frame. Okay, 2 hour supply. Right in the heart of that daily supply. So you can see we've already hit the daily. And that's what helped push it down to get me into the trade, to get us into the trade, right? Was the bounce off the daily supply. Now, if this price had hit the smaller time frame supply also, I would have been a little bit more iffy on buying like we did yesterday, because that's an extra set of a different time set of short sellers. That's a different time frame of people seeing that price point, but it missed their exit, or I'm sorry, it missed their entrance, right? These shorts that were waiting on this zone missed their entrance, their entry. Okay. So in other words, that's less people shorting the market and less people pushing the market down. The daily traders got in. Okay. Now some daily traders prefer to wait for the 50% entry. Okay. Kind of more of a confirmation type entry. But we missed the smaller time frame traders here, and we missed the smaller time frame traders in these would-be supply zones. So yeah, that aided on my decision to buy this market, because again, we go down to the 1 hour, and that's where my demand zone was. So yeah, at this point, we did blitz through this supply zone. Okay, you see two 15-minute supply zones there. Actually, if I just go down to a 15, okay, 15-minute supply, 15-minute supply, wicked in, chewed through that one. This one did catch some ask and drop price down, but it kept going back up. I was expecting a pullback like this in one of these two areas, but most likely this one, okay, because this is kind of the origin of the overall strong move down. So yeah, we got to bounce down, but then obviously the higher time frame demand zone took over and pushed price up, right? So that's currently where we're at. I have already moved my stop loss here, and because of this most recent impulse leg. Okay, so this is our most recent impulse leg on a 15-minute time frame. So I'm really waiting on this swing high, or this structure. I'm really waiting on this structure to get broken right here. So if we break that to the upside, then I move my stop loss from where it's at now, from where it's at under this swing low, I move it under here to this swing low, okay? And that's because I want to give it some wiggle room. I want to give it some breathing room to potentially keep going up. Now, once we get up into that 2 hour supply zone, I'm probably going to be out, because I could definitely see a pullback from there, okay? So yeah, good stuff. Okay, I've made some money at minimum, but I'm just kind of consolidating, just looking at it, of late. I mean, it looks like a little bit of a descending triangle, doesn't it? A little bit. Is it fair to say this looks a little bit like a triangle? Oh, you come here. Man, this is so touchy. Is it fair to say this is a little bit of a triangle? Okay. So typically when you get those types of patterns, what happens? When it exits that triangle, okay, you could get a strong reaction and then a very strong reaction, back to the line itself, and then place your entry, place your order. So that's what traders will be doing. That's not what I'll be doing because I'm already in the order. I got in the order down here when I didn't have to worry about any of this nonsense. So anyway, that's gold. Looking good. It's looking good. Now, gold is still, by the way, the most bullish score I have. Let's take a look at the setups on that note. Look at this. Gold. Gold, baby. Very bullish. I like it. I'm definitely happy with staying in it. That's why I want to give it some breathing room on my trailing stop loss, right? Because it's the most bullish asset I have. And yeah, and we're going through that contraction period, and we're still bouncing into that daily supply, right? So until we really get to that 2-hour supply, I'm going to leave the stop loss where it is. If we get up to that 2-hour supply zone that's inside of that daily I just mentioned, I'm definitely going to be choking it out a little bit, okay? I'm going to be locking in some more gains because I could very easily see that 2-hour price bounce into that 2-hour and turn around and take away all my unrealized gains, right? So awesome stuff. I'm going to stick with it. Silver's not far behind it. It's a +8. Okay. Another that you got the Australia and New Zealand pairs that are giving us bullish signals still. And then the newest one on our list, ladies and gents, is the New Zealand Swiss. Look at that. That's a currency pair I haven't talked about in a coon's age. Let me tell you. Okay. New Zealand Swiss. So let's go take a look at the economic calendar, the surprise meter again. I'll take a look at the surprise meter. So remember, the euro has gotten some strength lately. So it's no wonder it's wanting me to buy the euro. Okay. And what did I say that was? Swiss? Yeah, euro Swiss. Is that right? Is that what I just said? Oh, New Zealand Swiss. I'm sorry. New Zealand Swiss. Okay, so New Zealand. So it's showing a 50% reading. Okay, so neutral right there in the middle, neither bullish nor bearish. But remember the Swiss franc, that's looking pretty ugly. So it's giving me a bullish reading on buying New Zealand, selling Switzerland. Okay. And that's all a lot of that's from financial readings, financial reports, economic reports. So let's go take a look at that currency. And by the way, we'll take a look at a couple of these other heat maps as well here in a moment. But I do want to look at New Zealand Swiss because that is, again, that's something that I haven't looked at. New Zealand Swiss. Here we go. All right. What have I got? Okay, I've got a zone beneath. Start now. Okay, so here we go. This is top-down analysis. This is from the very start. Okay, where's my swing low, swing high? Well, here's my swing low. This is a daily time frame. Swing low, up here's my swing high. Starting from the origin of the strong move up, okay, which has broken a structure, most importantly, and this is the highest time frame. Okay, this leg up broke this structure over here. Okay, in fact, it broke this structure over here as well. So that's what defines what an impulse leg is on any time frame. Okay. But you start with the highest time frame as well. Got your impulse leg. Why do I know that? Because it broke this structure up. And it was just a big move. Okay. Impulse. It impulsed through that zone or through that swing high. Okay. And again, it did it over here as well. Just kind of wicked through it. So that tells me that I only care about this leg right here. Okay. That's the only leg I care about right there when I am looking at my overall move. Okay. So daily, I got a daily demand right here. Okay. Now below it, why wouldn't I be interested in any demand zones down here? Well, because I'm not saying I'm not interested, but when you're looking at a daily time frame, I didn't have any gaps, right? The only gap I see is from here to here. So that's going to be my gap, my runaway gap, okay? My acceleration gap, fair value gap. I know most people call it fair value gaps. But down below, do I have a gap? I do not, because all these candles and wicks overlap each other. Yes, even on a daily, even on a weekly, even on a monthly, okay? The same analysis applies. Always want to look for the efficient markets and just don't worry about them. Just only worry about where's the inefficiency in the market. The only inefficiency in this impulse leg, the only one is this one right here. That's the only gap. Okay. Only gap. So if I see a gap, I automatically have to draw my eyes to the candle or the 2 or 3 candles just on the other side of it. In this case, it's going to be this one here. Okay. And this is technically 2 days of basing. Okay. See this green candle over here, the big move up, based and consolidated for 2 days. Okay. Before getting that expanded range candle out. Okay. The leg out, move away. So yeah, this is it, guys. This is on a daily time frame. This is my point of interest. Now we got close to it earlier in the week, Monday. Okay, close but no cigar. Close is only close in horseshoes and hand grenades, right? You guys have heard that saying. So daily time frame, we got a daily demand zone. Let's drop down to a 4-hour. Okay, take a look. Now on a 4-hour time frame, and I'll just delete that gap just to get it a little tidy. On a 4-hour time frame, there's really not a whole lot of exciting stuff down here. Okay. I mean, let's just take that out of the way for a moment. So this is our daily demand, right? Zoomed into the 4-hour. That's kind of ugly. I got to be honest. Okay. That's way too many candles when I drop it to the 4-hour. And the structure of the candle that preceded the move up was short. Because what happened? You ended up having a big spike down, a big wick down, right? Before moving up. So what I'm saying is I don't care about this as much on a 4-hour time frame. I got to go to a smaller time frame. So let's do that. Let's just drop to a 2-hour to start with. 2 hours, same thing. Got the gap, or not the gap. I've got the candle, but it hangs out too high up. Talking about again the candle preceding the move up. Okay, this red candle. Just like the 4-hour time frame. I need to see, if I were to be excited about this area, I would need to see the candle at least be down about the same amount as the candle that legged out, right? But it's way too high up. So basically it skews the reward risk ratio, okay? If that makes sense. So just not interested in that. Let's skip on down to a 1-hour time frame. Okay, let's look at that same price area there. And now you guys see, okay, all this chop fest over here, but then you come up here and you finally have a candle, a decent looking candle. Okay. Now that's a very narrow range candle. We're only talking 5-6 pips. Okay. On a New Zealand Swiss, but the candle exiting had a really nice spike on the VSA, the volume spread analysis, right? Meaning trading activity, or some call it a tick chart or tick, whatever you want to call it. I don't fool with definitions too much. All I care about is the visuals. Okay. Did a lot of people enter a market, or did not a lot of people enter a market? And who makes big spikes like this? Typically going to be the big banks, the institutions, the hedge funds, the insurance companies, the whales of the world, the Warren Buffetts, right? Who makes the money? They do. So if they're doing something, then I want to ride their coattails and hitch a ride. Okay. So because of that pretty decent spike in volume spread, okay, definitely want to keep an eye on this. Now, with this being such a narrow range, there's a couple options you have. Number one is you could be aggressive, and if price comes down, you just put your stop loss below that point, but you're really not giving yourself hardly any wiggle room. Okay, whether you put it there, whether you drop it here, whether you put it here. The very conservative way to go about this is dropping it clear underneath the daily demand, but then obviously you're completely skewing your reward risk ratio to where you're not making as much, right? But if you're a newbie, if somebody's a newbie or a beginner, under a few years in trading, okay, this is a good place to do it, because at the end of the day, you're just trying to see wins. You've got to get wins under your belt. You got to build your confidence, okay? Winning brings confidence. Okay, it's just like any sports, right? Baseball, basketball, football, doesn't matter. Winning breeds confidence. So this isn't how you're going to make a ton of money. Okay. But it's just getting used to how do I use my trading platform? Okay. I did a 30-minute coaching session earlier this week with a guy, and a lot of the questions revolved around well, he was having some challenges just figuring out how to use the trading platform. So that's obviously goal number one, guys. You got to understand your trading platform. There's always YouTube, okay, YouTube channels. If you ever need to explore a platform, you can go to their websites. They typically link their YouTubes to their websites for tutorials on how to use the platform. So that's one thing. Okay. He was worried though about how do I get in and out of trades. I said, man, the first thing you need to know is how to use your software, use your platform. Start with that. And then he started talking about gut feelings on this or that. I'm like, we don't gut feeling this. The chart, after we have a fundamental. Now, I don't talk I don't really talk too much on beginner traders about the fundamental and the sentiment analysis as much. Okay. Because the basic idea is you got to understand how to time something first. So that's obviously where the chart comes in. You got to know your way around the platform. You got to understand the basics of the behaviors of whatever it is you're trading. Hey, how much does this typically pull back? What's the spread on this asset? How big of a stop loss should I do? Okay. It's a good idea to understand those basics first, because at the end of the day, we don't want to overwhelm anybody. So I basically told him, I said, look, let's focus on just the getting around the chart first and the behaviors of the instruments that you're trading so that you understand how much they move. ATR, average true range. Okay. Just understanding how many pips a day does it move. Okay. Dollar yen moves 120 pips. Okay. It's one of the faster moving major pairs. Euro pound moves 40 pips a day. Okay. It's one of the slower ones. So just understanding how far a currency or pair or whatever asset you're trading, how far it moves in a day is a very basic thing you want to know. And thankfully, there's tools for that. And it's quite simple. Okay. If I just flip on over here, guys, there you go. ATR. How many pips a day does it move? So New Zealand Swiss, it moves 27 pips a day. That's slow. That is slow. That's molasses in a snowy forest. Slow. Okay. Might be a good starter currency pair. I don't know. Okay. You might drive your Ford Pinto when you get your driver's license in high school. You might want to drive that, Toyota Prius to begin with, as opposed to a Ferrari, correct? Or a Lamborghini. I don't think too many parents want their 16-year-old that just got their license last week hopping in their brand new Porsche and taking off. Okay. They're probably going to put them in a beater. Okay. The Hoopties. The Hoopty Mobile, Hoopity Hoppity. Okay, my first car was a 1969 Ford Fairlane, a Fairlane 500 rather. I loved that thing. If you guys have ever been to a demolition derby, those are the types of cars you want. Those are the types of cars you want to be driving and crashing into people. Super thick steel bumpers, okay? You can't sneeze on it and put a dent in it like you can any of the cars that come out these days. It's funny because I ended up I was parked in front of my sister and I got in the car. I was going bowling and I got in the car because I was excited about getting there and I backed in right straight to her. She had a Mercury Sable, okay, mid 90s, I think it was, early 90s. And I just obliterated her bumper. Did not put a single scratch on my bumper. Okay. Daddy wanted me in a car that was going to protect me, okay? Just like any other parent. They want to protect their kid. They don't want them also, obviously destroying something expensive. So when it comes to trading, just to weave and bob and tie this all back into what I was saying, you might consider that. Newer traders might consider that. Don't worry about driving the Ferrari. Let's drive the Prius at first, okay? Not the cool kids' car, but so that you can get your experience under your belt and then graduate up to the better cars, or in this case, the faster assets. So Euro, pound, New Zealand, Swiss, a lot of these New Zealand pairs, some of the slower currencies, some of the Aussie pairs, okay, they're slower pairs. So it's great, I think, assets with training wheels. Okay? So it's just something to consider. But anyway, I digress from all that. It is a slow pair, the New Zealand Swiss, but nevertheless, a zone is a zone. Okay, a supply or a demand zone is still a zone, whether it moves 30 pips a day or 150. Sorry, excuse me. So anyway, New Zealand Swiss, as far as, let's just get this back to my regular chart here. And I do have about a half an hour. Guys, in 5 minutes, we've got those red folder events coming out, the high impacts. So we're going to take a look at dollar CAD here in just a moment. But yeah, this is where we're at. So because this thing moves so slow, I'm probably going to be tempted just to put my stop loss. Well, me, because I've been around the block, been around the block a little bit in the trading world, right? So me personally, if we come down here and get some type of a pretty good bullish engulfing candle, or candle with a wick underneath, or a big volume spike, then I may just get into this trade. Now it's a ways away still. Okay. You guys see it down here. Sorry, guys. I gotta clear my throat. Got a frog in it all of a sudden. All right. So anyway, yeah, not a whole lot of gains really to be said on that. It's still a ways away. I mean, it's 30 pips away as we speak. So there's your ATR. This thing might take all day just to drop that far, or it might not drop. Okay. We may not even be worried about this asset till next week, so long as we've still got the bullish reading on it. Okay. So Aussie dollar, New Zealand dollar. I don't know if I went over the, let's go back up here. Okay. Here's our Aussie dollar. This is one, look, I got to say, this is one that I'm really, I was really considering hopping in. Okay. So look at this Aussie dollar. Number one, let's see. Yeah. Number one, it's a bullish 6. And then its friend is a New Zealand US dollar. It's a 5. So let's go take a look at those real quick. Make sure my charts are still up and running. Okay. Let me just refresh my screen over here real quick. Okay, perfect. So when it comes to the Aussie dollar, taking a big step back on a daily time frame, guys, this thing has been up pretty decently, okay, ever since late November. And you guys see I drew this trend line on there connecting these points here and these points in here. Just want to see what happens in and around that. Wait a minute, did I not get that right? Oh, I drew it up to here. That's right. You know what I'm going to do? I'm going to look at something real quick. Okay. So there's really a couple ways to look at this trend line. Now, I actually moved it because if we connect this point down here and we connect this point here, you guys clearly see we broke a structure. So in other words, this point where I moved it to was an impulse leg. I know it's an impulse leg because it broke this structure. Okay. So if I put that there and then we come over here to the third touch, okay, gap or went just a little bit inside, collect a little bit of liquidity from those that decided to short this market, thinking, oh, it's broken out to the downside, guys. We got to short this market. Okay, that's what these wicks are underneath. That's the shorts getting, you know, that's the trap, right? That's the trap they send, the bear trap. Okay, before pushing back up, breaking structure. So again, I want to look at this spot because we broke this structure. Find demand zone. Okay, 4-hour time frame. That's where we're at currently, are we not? Is that not a big doji candle? Okay. And you guys see I've got a white line going straight across, which we're in now. 1 hour. That's a 1 hour. Wait a second. Let me double check here. No, I drew. Why did I put 1 hour? Oh yeah, duh. 1 hour for the line. Okay. No, I still got that wrong. This is 4 hour. I should have told this 4 hour demand, not 1 hour. Because the 4 hour demand is the box itself. The 1 hour demand is the white line. So there we go. So are we not in a spot where we can buy Aussie dollar? What do you guys think? Let me know. If I've got a bullish reading on this, if I have a bullish reading on this and I'm inside of a 4-hour, 1 hour demand zone confluence, am I okay to trade this? I'm going to delete this box as we speak because that's old news. We dropped through it. Man, my throat is just not letting me talk today. Let's see. I'm just taking a look at where that zone is in relation to a couple other things. RSI. Yeah. Let's see here. Okay. Yeah, I was just looking at my RSI. Guys, let me know. Oh, shoot, guys, we got 1 minute. I'll get back to Aussie dollar right after we take a look at dollar CAD. Let me get my chart back up, guys. Sorry. Time moves fast. I failed to see what time it was. So dollar CAD, let's look at a 1 minute chart. Okay. Don't care about anything else at the moment. So dollar CAD, as far as the reports, guys, so we got, again, Canada and dollar employment numbers. All right, unemployment rate for Canada has come out 0.1% hotter, okay? I mean, higher, I should say, not hotter. So that's negative. That's bearish for the Canada dollar. But their employment change number came out pretty good, okay? So employment change, let's just get my calendar up over here real quick. And let's isolate this only to the red folder events. Okay, here we go. So Canada, a little bit of mixed data, okay? So one good, one negative, okay? US dollar, average hourly earnings nailed right on their head. So guys, this is how real wages is calculated, partly how, okay? So that was right on the nose. So it kind of cancels itself out. Non-farm payroll, the ugly one in the room, 50,000 jobs as opposed to the 66,000. So that is bearish. Unemployment rate, though, ticked down 0.1%. So a little bit of mixed data there. Let's flip back on over, though, to dollar CAD, and you guys can see the wicks starting to happen already, okay? So far, it's about 10 pips, 12 pips of a range. We're just in our first minute and a half, though, so this thing could really move. Dollar CAD is also one of those assets that really doesn't move too huge as far as your ATR, okay? Just looking at it over here on my average true range, it's only 52.7 pips a day, okay? So just call it 50 pips. That's really another one of the slower assets, okay? Kind of like the euro pound we talked about, the New Zealand Swiss we were just looking at. It's not something that just, rips your face off, so to speak, like a dollar yen or a euro yen, okay, or a pound yen. Basically, a lot of your yen pairs. So anyway, guys, I would say that this is just kind of like meh. It's not really exciting. It's not really, it's not really bullish or bearish. It's just kind of like sideways. Now it's early, so we could still see this thing catch a bid or catch an ask and make a decent move today. But initially, that's really not so much. I mean, that's all. Yeah, again, about a 12 pip move, 12 pip range, and that's it. And it makes total sense. Okay, sorry, getting back over here to the chart because I just realized I wasn't on it. But yeah, it's just kind of balanced. Okay, big spike up, big spike down, back to the middle, and now it looks like at the moment the dollar is seeing a little bit of weakness. Nothing too crazy just yet. I would say this is a muted move, a little bit of a muted move at the moment. Muted move. So we'll just keep an eye on that. As far as plays for the dollar CAD, I don't know. Let's go take a look. Now, number one, it is, let's go over here, guys. I'm going to see where the dollar CAD is. I think it's on the bearish side, if I remember right. It's bearish, but it's neutral because it's not strong enough of a signal. Let's see here. Yeah, dollar CAD. So we're setting at a -4. So I just basically, well, actually, so that's -4 before these reports. Let's go over here and take a quick look. I think, let's see here. That's going to cancel itself out as far as top setups, I think. Down here we got, yeah, see, this is just split perfectly down the middle. This is as neutral as it gets, guys. One bullish, one bearish for Canada. One bullish, one bearish for the US. But then you also had one neutral for the US. Okay, so that's 2 warm, 2 cool, and then 1 right down the middle. What do you do with that? Right? Well, for me, I think I'm more interested in the fact that the non-farm payroll. So this is where hierarchy can kind of change things around. Like I think this is probably, if I had to put money on it, I would put money on dollar CAD going down because non-farm change, guys. That's not the greatest looking number. Okay, they expected 66,000 jobs. They only got 50, which is also less than the previous reading. So I feel like the dollar pairs are probably going to be going down. Let's go double check the Dixie. Let's go look at the Dixie over here, Rick. Okay. Now, just looking at the Dixie from a daily real quick, observe the fact that we just bounced into a daily supply. This one's old news at this point. This one down here has already been touched. So I'm going to color it light yellow and push that forward. Guys, we're in a daily supply zone as we speak. So dropping down. Okay, you had a 4 hour here. Efficient price structure above it. So I'm not worried about anything up there. We bounced into that as well. So that's a 4 hour daily confluence supply zone. We just had a report with a non-farm release that came out about 12, 13,000 less. I feel like this could push it back down because at this point on the Dixie, what have we got? We've got the formation of a 4 hour bearish engulfing candle, do we not? Does that look bearish engulfing to you? Let's turn my drawings off. Hey, look at this candle and then look at the current candle. Okay. Up top, down below. If we get a close down in here, guys, I could see the Dixie dropping. I could see the dollar pairs dropping. Right? I could see that. That's where I would. Now, is it guaranteed to do that? I don't know. I don't know where this stuff's going. Nobody does. But I would look at it in the lens of probabilities. And remember, stacking my odds enhancers in my favor. Okay. And potentially getting into some dollar short positions. Let's go back over and take a look at the fundamental, or I should say the economic surprise. Where's the dollar? Look at this. So the dollar's at only a 36% reading. Okay. I'm definitely thinking this is going down dollar CAD because Canada is the strongest currency. So let's look at the individual currencies. Look at this for the dollar. Okay. What is today? Today's the 9th. We just had the JOLTS job openings come out. Okay. Or not JOLTS. I'm sorry. The non-farm. This is definitely going down, guys. So look at this. So this is the previous reading for the non-farm payroll. And that report was bullish. Okay. The report we just had today came out bearish, right? Missed expectations. So this 36% is going to drop. Now, what about the other report? The other reports. So the average hourly earnings is going to cancel itself out. The unemployment rate. Okay, so let's look at the unemployment rate back over here real quick. Unemployment rate. Okay, so think of this. Think of this. So the previous unemployment rate report released was bearish, but today's was good. So we basically, on one report, went the other way, and on the other report, we went the other way. So basically, I think this will just stay the same, guys. This is basically going to stay the same at 36% when all shakes out. But I'm personally, if I had to put my money on it, I'd be putting my money on the dollar, the dollar going down because of that non-farm payroll. So let's go back to my top setups. And this will recalculate here shortly with all the other goodies on it. Let me get. So dollar sells. So that means that this Aussie dollar is a much more attractive buy for me. Okay. Because I'm buying Aussie and selling the dollar, right? New Zealand dollar, same thing. Okay. I feel like it's a good bet to join. So I'm going to go back over to because I don't have anything else on the Dixie or the dollar pairs at the moment. So let's go have another look at the Aussie Zealand. Okay. Let's go look at these pairs real quick. And we do have about 20 minutes. So yeah. Not a surprise. This ain't a surprise at all. And man. Yeah. And you guys remember I was talking about this on the outset, the Aussie dollar. Oh my gosh. Look at this. Guys, this is what you got to deal with. I should have been in this trade. I probably should have been in this trade already after it hit that 1 hour demand, right? So the white line, the 1 hour demand inside of the 4 hour. If you're a newer person, a newbie, or trader who's only been trading a couple of years, it's a good idea to stay out, obviously, because of the reports released. But nobody knows what's going to happen. Nobody knows how these reports are going to shake out. I wished, because of what my analysis was, I wished I was in the trade. But at the same time, did I break any rule? Nope. Because the rules are 5, 10, 15 minutes before a report release like that, stay the hell out of the market. And obviously when the report is released, and then that's even a good idea for that next 10, 15, 30 minutes afterwards. Okay. Wait till the volume squares itself. So for the Aussie dollar, okay, you guys can see clear as day where those employment numbers came out right here. What about the volume preceding that? So all these candles up here, right? On a 1 minute, you kind of get an understanding of how big those candles were or weren't. Well, obviously right now we're in this, very volatile period. So your volume spread analysis spikes are going to be up here pretty high. That's why you get a red candle like this on a 1 minute chart on almost every single one of these red folder events. Because that's all of a sudden a ton of traders, a ton of trading activity. And again, where does that come from? Yeah, you got a spike of retail traders, but your big banks and institutions are stepping in, manipulating price all over the place, right? So yeah, it's just a good idea to stay out, because this, just as easy as this went, in the positive, it very easily could have dropped the other way. It's just Russian roulette you're playing when it comes to getting into trades in and around those high impact red folder events. So what are we left with? Well, I'm waiting until this volume starts coming back a little closer to where it was at before the report. If I'm a newer trader, okay? Now, I may possibly look to hop in a trade myself, but that's only because of 12 years experience says that I think I could possibly get into this and be fine, based off of previous times I've been in this spot. But again, I'm not going to do it when the report's released. Okay. And keep in mind, if you're in a prop challenge, you can't do it anyway. Because if you get in a trade, usually 5 to 10 minutes before and after. Okay. All-up prime was 5 minutes. So during those red folder events, to avoid breaching your count and losing it, you cannot be in a trade 5 minutes before or 5 minutes after. So it's a 10-minute window. You can't enter a market order. You can't enter a limit order. You can't have a stop loss or a take profit. Okay. Any type of order cannot be placed during that 10-minute window. So 5 minutes before and 5 minutes after, right? Some prop firms, I think, are 10 minutes. I've seen that. I think there's even some that are 15 minutes. So yeah, no rules were broken. Would I like to be in this trade? Yeah. But would it be from luck or skill? Okay. It's luck. I don't want to win because of, if you're at a casino, you want to win because of luck. You want luck on your side, right? When you're in trading, it's just a different beast. You don't want to win from luck. You want to win from skill. Okay. Because if you're trying to win from luck, you're gambling. You're throwing money in a slot machine and pulling the handle, right? You don't want to do that, because that's not sustainable. That's why. Okay. If you're crazy enough to sell the farm and bet everything on red on a Russian roulette table and win, God bless you. Kudos and congratulations to you. But we all know that that's not safe. Okay. Or sustainable, I should say. It's crazy. I've seen those videos on YouTube where this one guy sold everything he had to his name. I think it was like $110,000. And they had the news in there videotaping him, and he put all of his money right there on the table. Everything he'd sold. He sold his house, I think it was, maybe a car or whatever. Everything he's got. $110,000 he came up with, took it to the casino and bet everything on red or black, whatever color he picked, and won. So doubled his money right there. Do you think that's sustainable? I don't think it's very sustainable at all. I think you got to be crack-brained to be doing something like that. But nevertheless, hey, everybody's their own man or woman. They can make their own decisions. But in trading, guys, just always know, if you don't learn one thing from me today, okay, or the one thing to understand, the most important thing, we do not want to win or lose based off of luck. We only want to win or lose based off of skill. Okay, this is not a slot machine. This is not gambling. Unfortunately, there's a bad rap out there in trading because we're gambling, we're a scam, we're a spam, or this or that, right? Well, that's because of the scammy, spammy people that are out there trying to teach people and make people think this, you can get a quick buck. Oh, you can double your account. You can double your account in 90 days, right? All this crazy nonsense. If you guys have any any interest in going and doing some homework, go look up IML. If you guys have ever heard of IML, okay, iMarkets Live. That was a kind of a little bit of a Ponzi scheme, okay, a network marketing company that was over trading. Okay. You want to talk about anyway, I don't want to get too deep into it here. I don't want to get in trouble, but actually, I don't give a damn. Yeah, go look it up. IML, iMarkets Live. You want to talk about Ponzi's? Okay? That was one of the only ones I know about in trading, but that's gambling. Okay? That's not skill. Teaching people to recruit people in, and that's it. You don't even learn the skill of trading. Ridiculous. So we want to be skillful, and this is why that's why I like to trade, to teach. Okay? I teach. The more I teach you, the more I learn. The more I reiterate the ideas and the rules to myself. So anyway, guys, Aussie dollar, New Zealand dollar. Let's go look at the New Zealand dollar again real quick here. Yeah, see, New Zealand dollar, the other bullish pair, there's a demand zone, but it's still a little ways away. It looks to me like we're trying to make a bullish engulfing candle as well. Let's go look over here to the left. Okay, so we did have price. I'm just going to do this. I'm going to put a line down here. I just want to see where we hit over here on some smaller time frames real quick. Let's see. Did I have a demand zone down here? Let's look. Oh, I guess that turned into a 2 hour after all. Okay. So here we go, guys. Yeah, 2 hour. So why did it bounce? Well, it bounced because at the bottom of this daily demand zone was a 2 hour demand zone. Now, I got to be honest. The reason I was ignoring this zone is because there was no damn volume down here. Look at the volume spread analysis candles. That's hideous. Do you think that excites me and gets me out of bed? No. Now, the placement of it does. I do enjoy the fact that it was at the bottom of a daily zone. 20% trading like gamblers. Yeah. Let's see here. What you got, Algo? I paid for, okay, 80%. 4,000 for a course, Algo? Which, was it IML or was it something else? 80% of the course was them showing us how to get more people. Yeah. You're explaining it. Were you part of IML? I'm just curious. You don't have to tell me if you don't want to, but yeah, pretty good. Yeah, recruiting, right? It's just a recruiting. Okay. Yeah, I've never heard of OBG. I have to look them up. It sounds like probably sounds like the same thing to me, though, or similar thing, I should say. Yeah, 20% like gamblers. Yeah, exactly. It's just ridiculous. There's no skill involved. Hey, there's skill as a salesman. You have to be a salesman for that, right? Guys, I come from a sales background. I know how the sales side of it works. It was actually appealing to me there for a while. But then I started seeing right through it because even though back then I was only in trading for, let's say I was only in trading maybe 2 years at that point. After 2 years, okay, which by no means is any kind of a guru or master of trading, but after only 2 years of studying supply and demand, I already was looking at the way they were trading and thinking, well, that's the stupidest damn thing I've ever seen. Because they're totally ignoring unfilled orders. They're totally ignoring the important spots on a chart, okay? And the only thing they worried about was retracements back to the 61.8, okay? On the fib, on one particular one. And then they were doing like the harmonic balancer, types of setups. I don't understand. I got to be honest. I don't understand any of that crap. The bats, okay, all the harmonic patterns, ridiculous stuff. It's like, where's order flow? This has nothing to do with order flow. This is just nothing more than the bad form of geometry on a chart. So Yeah, I saw right through it. I'm like, nah, B, I'm just gonna learn how to actually do it myself. Now I knew how to trade at that point. I knew the basics. I just didn't understand all the nuances. The nuances are what take time. So I dug into it. And then come to find out, and I don't know about OBG algo, but yeah, come to find out IML got shut down like a year or two after I was considering it, right? And the CEO was insistent that we were helping people and this and that. Of course, that's what every one of the CEOs of Ponzi schemes and those types of things get say. We were genuinely helping the people, or I didn't steal the money, or whatever the case is. So crazy stuff. At the end of the day, it's just good to just learn the damn thing, learn the stuff ourselves, right? Because after you learn it, nobody can take it away from you. Your job can be taken away from you. Okay. Anybody's job can be taken away, but your skill set can't. So that's the beautiful thing about trading, especially when we all get older, because we're all going to get older one day, right? If we're not there yet, there's going to come a point in time where you're not going to be able to go out and play ball or work in the garage or do that job. So, you know, as long as you can sit at a computer, this is something literally we could do till the day we die, right? Trade. So we might as well learn a lifelong skill, and it's going to make everything better. Okay. Anyway, digress from that. So back to this demand zone. Yeah, there was just no volume. Now, even though I didn't like the trade, didn't mean the market didn't like it, because clearly they did. Because if we take that demand zone and pull it all the way forward, that's where we're at. That's exactly where we got to bounce. Look at that. It's pretty, isn't it? Now, at this time, if we're just isolating just this demand zone, the one that I passed up, okay, I mean, it's still only went 2 units. Let's be candid about it. So if I go from the proximal line to the distal line of this demand zone, that's 7.8 pips. We'll just call it 8 pips. So far, it has moved 27. So that's 8, 16, 12. Oh, that has moved 3 units. Okay. So that did move 3 units. Damn. That did move 3 units. Okay. So that would have been a winning trade right there. Right. But to me, I don't like it. I didn't like it because if I'm looking at it on 1 hour, on a 2 hour, is that not lower lows and lower highs? Yeah. Right. Yeah, I'll go. I agree, man. Better to do it ourselves. Do it your damn self. What do you got, Algo? Is there any other items you're looking to trade? Or Sherry? You guys got anything? Let me know. Because I'm pretty well. Let's look at. Oh, you know what? Yeah, let's look at Swiss yen and pound Aussie real quick. I remember these are my 2 bearish assets over here. Again, I don't trade the South African rand. I don't have it on any of my accounts. So Swiss yen, which is the most bearish score, and then pound Aussie. Let's look at that real quick. Swiss yen. Okay, Swiss yen is right here. Now this one. So this one's just kind of in a weird spot for me. Okay, we are in a 2-hour supply zone as we speak. We do have a couple former support lines that are going through price as we speak. And I need to delete this. I'm going to delete that one as well, since that's old news. Oh, wait, no, I want to keep that there, actually. This is another support. Get this colored blue like I normally do. Okay, so I've got some decisions to make, y'all. I was watching this earlier thinking, should I short this or should I not? Because we started with a 4-hour, okay, which is the red box. Now down here, we did have a 1-hour supply, but you guys see it blew through it. Okay, now we get up here, and I think I got down to a 15. No, I got a 30. It was a 30. Okay, so let's look at this point after I turn my drawings off. Okay, look at that candle right there. Is that not a pretty candle? This candle right here. I would have liked that if it would have had a little more volume spread movement on the way out. But here's partly the reason I've skipped this at the moment. Used to trade indices, but I don't know. I just prefer gold. Yeah, good stuff. I mean, rarely touch other things. Yeah. Okay. Yeah, you know what? I've come to love indices. I gotta admit, I've been trading a lot of NASDAQ of late, and it's been working well for me for whatever reason. So if it ain't broke, don't fix it, right? So I'm gonna stick with it. But yeah, gold as well. Look, I never used to, up until a few years ago, I never traded anything outside of the FX pairs. But then I started understanding some of this fundamental stuff a little more. And then I got the edge finder and it really just pushed it into overdrive. So yeah, I've really added the indices, the metal, I should say the gold, silver, Bitcoin. I used to badmouth Bitcoin all the time, but now I like it. I enjoy trading it. But yeah, it's just in a crazy spot right now. But yeah, so back to this Swiss yen. When we had this leg out candle over here, if you look at the VSA all the way at the bottom, it declined on a bigger candle, did it not? So I just didn't like that. I liked that it broke the structure. I just wished it had a little more strength on the VSA. I really wished it did. If it did, then this would have been a no-brain short for me. But even so, let me see if I can get you know, if we can get, okay, so let's see if we got a bearish, a break of structure. Let's drop down here. Let's drop this. I'm just basically looking for a decent structure point down here. Obviously, way down here we have a demand zone, but by then the risk reward is kind of skewed quite a bit. Tell you what, let's look. Let's take another look. Okay, so here's a 1 hour demand. Okay. So as far as looking at a break of structure, this candle right here could potentially become a 1 hour supply, but it really hinges on whether or not this candle here gives me a nice expanded range movement and can maybe close below here before retracing. Because if that's the case, then this will be a play for next week. So this candle, what I would ideally like to see is for it to continue to drop and close down by, you know, down under this demand zone and then return. And if it returns, then we've got a 1 hour candle right here. So that would be a break of structure, would it not? And then we could make take a play to the downside like this. So let's just kind of do this. Yeah. And I can't really draw the zone yet because that current candle has not given me an expanded range candle to the downside. But that would basically be your supply zone. Having your move away break a structure or a demand zone, okay? And oftentimes it can be both. Close here, and then we get the retracement up, and this is our trigger to short as this thing starts curling back around to the downside, right? So that would be a potential play. Swiss yen, as far as the speed that it moves, the average true range, it moves 100 pips a day. Okay, so that's a pretty bouncy little asset. So we'll keep an eye on Swiss yen here for the rest of the day. That'll probably be my top bearish asset. So I do have 2 minutes left. Let me just get caught up one final time on the chat. Yeah, Algo, US 30. The DAX got you, eh? Man, I was just looking at the DAX as far as their put to call ratio. I was looking at this last night. Where's my put to call ratio? It's up here, I think. Got so many items. They just changed everything around for us. So let's, where's it at? Put to call. That's sentiment. That's got to be sentiment. The crowd sentiment, duh, there it is. Okay, so if we pull our put to call ratio up, Algo, as far as the options market, look at the DAX. Look at this. Look at this DAX, Algo. See this line? This line, this is more your neutral range in this area. Okay, that's neutral. But when this comes below my blue line, that's your high call volume, right? So that's everybody betting the farm on the DAX. It's going to the moon, right? So what does everybody do when an asset's going to the moon? They buy. Okay, they're buying at the absolute worst time, and we know that because of the options volume. Okay, all the calls, the high call volume that they've got going on. So this is liquidity, is it not? Go look at the German chart real quick, and then we'll get out of here because I do have about a minute. I could hang around for another minute or two after, guys. Oh, by the way, I can hang on here as long as I need to. So let's go take a look at the DAX real quick because, yeah, I was looking at this thing yesterday, and this thing's just going to the damn moon, is it not? Is this thing at all-time highs? Yeah. I mean, just like a lot of these indices of late. But think about it. You got a super high call volume at a time when it's at all-time highs. What goes up must come down. Is this not a short squeeze? I mean, is this not a squeeze back down? I don't know. Remains to be seen. It's Edge Finder algo. I'll show you here in a second. I'm just going through the rest of your messages real quick. So, yeah, US 30. I haven't traded the US 30 as much. It's mainly been NASDAQ. NASDAQ and gold have been two of my main assets of late. And I mean, I'm traditionally a currency trader, but I don't know. The indices and the metals have just kind of made sense to me. I've had a lot of success with them the last quarter. So again, if it ain't broke, don't touch it. I'm gonna try to ride that train. Man, we were all unexperienced back then. How long have you been trading, Algo? Aha moment with gold, and it made me fall in love with it. Yeah, gold's got gold and NASDAQ kind of doing the similar thing. So the platform I use. Are you talking about the Edge Finder tool? Is this what you're talking about? Yeah, so this is developed by A1 Trading. So I can just show you the let me just do this, guys, and then I'll pop off of here in a minute. Let me show you where you can go. So, okay, look at this. So Trader Nick, okay, this guy right here, Algo. This guy is the guy that developed the tool I use, the Edge Finder tool. Okay. So he does a stream. In fact, he's doing his stream right now. I'll be appearing on this guy's stream next week, by the way. So more details to come. I'll find those details out today as far as the day and the time and everything. I know I'll be filling in, I think, one of their 30-minute slots because when you go on the free agent, a lot of people like that. A lot of people saw that. So blessing, but yeah, I got an invite to appear on a show. So that's next week. But anyway, this is the guy that developed it. His company is A1 Trading. Okay. Now he does his streams on both his personal and his trading company streams at the same time. But anyway, if you go into his website, which is a1trading.com, okay, and then I'll just share this instead. This is where you get the tool right here. So the best thing to do is watch his live streams after mine because he does a lot of promos, periodic promos. Okay. You pay for the tool one time and it's yours for life. There are no monthly payments. Okay. It's just a pay for it once. And all the upgrades that he does, because he's constantly upgrading and making this thing awesome, even more awesome than it already. All the upgrades are free too. You don't have to pay for anything else. You pay for it the one time. Okay. I'll let him handle the pricing side of things because it's obviously his tool. I don't know what promos he's got going on at the moment or what, but either way, guys, I think I'm about out of here. Was there any last second thoughts before I get on with the rest of my day? Let's see here. Currency I never traded, and every time I says, people are surprised. They say we all start with, yeah. Well, a lot of people here in the States anyway start with stocks, it seems like, but yeah. By the way, where are you located, Algo? I didn't even think to ask that. You here in the States or where are you at? I feel like you're here in the States. Oh, you're in Canada. Okay. Man, I got to get to Canada one day. Closest I've been is Detroit. Catching a flight, New York, I think it was New York. But I just don't like the cold as much. I live in Kansas City, and we've actually had a pretty mild winter this year so far. We had one snow. I think that was it. Yeah, I don't blame you. I don't blame you, man. There's some craziness going on here. But anyway, I think that's the end for me, guys. Again, as far as my top setups go, I'm going to be getting over here back into the Aussie and New Zealand dollar pairs just to see if I want to try to jump in gold and then Swiss. Yeah, and that's it. And then just to put it on the gold trade. Go. Okay. I'm going to pay a little more attention to it when we start getting up here. You guys, you see, I've got a take profit actually right here, the top of this. So I may just kind of kick the can down the road and then trail my stop loss under this swing low just to, put a little breathing room to see if we can get another push. So yeah. Yes, Algo. Absolutely. Absolutely. Yeah. Just go to his website there, a1trading.com, and tell him Tiger sent you. All right. But other than that, I'm going to go ahead and get up out of here, guys. So I'll be back on Monday, and I'll have more details about what I'm doing next week. Okay. I may mess around with my times just a little bit. I'm not certain yet, but I kind of like this time. So we'll probably stick with it. So anyway, guys, look for my next live stream link. I'll create it here later on today. Love y'all. Have a wonderful weekend. Stay safe, and talk to you later.